Now, this was a piece of research funded by the Australian Research Council and also funded by the National Australia Bank and by Good Shepherd Youth and Family Services, Youth and Family Service. And it's research that grew out of our increasing concern and the bank's increasing concern that a lot of people were unable to borrow from the bank.
1 in 7, which adds up to 2.65 million Australians, that's roughly the population of Canberra, are marginalised or excluded from mainstream financial services. This has important consequences. For these people, their ability to participate fully in social and economic activities is reduced and their financial hardship is exacerbated.
These people have a poor credit rating, or they don't earn enough money, or they've got no savings. They nevertheless have need for money, and since they can't borrow from the bank, they have to go somewhere else. Now, the alternate source they go to are payday lenders, which you would know as pawnbrokers very often, cash converters, Money3. They're payday lenders or pawnbrokers, and they're a major and growing source of finance for an increasing number of people in Australia. The people predominantly, about 80% were people on income security payments. And within that, it was people, the majority, about 50%, were on disability payments. Yeah, and this was shocking. This is what shocked us, and when we launched the report, Minister Bill Shorten noted it.
One statistic I did find upsetting was that people on the disability support payment make up the single largest category of borrower in the survey sample. I think that's remarkable given that people with disability just make up 18% of the general population.
Another 40% were on New Start allowance, the remainder were on parenting payments. They were borrowing small amounts of money because they were using these for activities of every day, so it was for very ordinary sorts of things like buying sufficient food because they'd had a bill, or paying to get the washing machine fixed, or to pay utility bills. That was a really big one. Things that you and I just take for granted, they had to go and borrow to pay. Why is it a problem? It becomes a problem because if it's an everyday expense, if you borrow against an everyday expense, you've got to borrow more the next time. You've got to keep on borrowing. So you never actually get to pay out the loan. And that's the essence of the problem, that people either have multiple loans or they have what we call spiralling loans, and that they never actually pay it out and they just end up with more and more and more and more debt. That's a problem. Hopefully it'll go towards prompting the government to review the income security system and start thinking about the adequacy of payment levels. By not funding income security at adequate levels so people can live their lives, you're actually forcing them into the hands of these industries and making their life worse. So it's really for government to step up to the plate. And RMIT has a reputation for doing very applied, grounded research that's important. We're not into highly theoretical research, we're into grounded stuff that contributes to the everyday policy discussions that go on about issues to do with ordinary Australians.